Good morning to all traders and welcome to another Elliott wave focused. It's the weekly analysis forecast that we do for three different assets, three different instruments using Elliott waves. It is actually the favorite day of the week for me because it is where I thrive. So in today's weekly analysis, I'm going to take you through the Elliott wave analysis main scenario for WTI oil, the S&P 500, and also silver. Okay, so I'm going to start off, of course, with WTI, as you can see already on my charts. And I'm going to tell you that, first of all, okay, when we look at the daily, we can look at the very long term. We look at super cycles and multi-years and all that stuff, but it's not really matter when we compare to where we are currently. And what we do know, what I'm saying is that I'm not going too far back, okay, like before 2020. What we do currently see though, it is a move to the upside, okay, and the move to the upside is it's got some sort of seven wave structure. So when we're looking at seven waves, we can look at them in a progressive manner, which means you have an extended three, because you got 1, 2, 3, 4, 5, 6, and 7 waves, right? Or that, of course, needs to indicate progress, or otherwise, it's going to be part of a correction, which means you're going to have 1, 2, 3, 4, and 5, and then the 7 will be part of a correction, the 6 and the 7 wave, right? And that is because over here, we do not get progress, okay? So what I'm telling you simply is that we do have 5 waves here, right? And because there is interaction over here, that has to be the end of this wave to the upside, okay? Unless if it could be some sort of flat pattern, but it cannot be because the rules are not respected, okay? So I am labeling this as the end of the wave 5, and I'm looking here at potential A, B, C, D, E, which is going to be a triangle in wave B, okay? So we are on the daily, of course, so that can take time to complete and make a somewhat of a structure, but we're going to go a little bit lower in as well to determine potential moves and potential price action levels and projections. Now, the idea here is that we have a running triangle in wave B, okay? Equally, there could be an idea where this is going to be some sort of expanding flat, but usually expanding flats, it's very, 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 very rare that the expanding wave B, the irregular wave B, is going to expand more than 1.382 of the Fibonacci level. Okay, but in this case, and I've measured earlier, we'll go to around 150. It is possible and goes up to 162 as well, but it is very, 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 very rare. So we'll have to go something that is not too rare, and that would be the running triangle. Okay, obviously there is, of course, different scenarios as well to look through, but we're not going to have a look at all the variations because it can take up to 1 hour to just look at all those variations. So anyway, over here now, I'm going to place a channel. I'm going to connect my base channel from the beginning of this wave all the way up to wave 2. And look at this. So there is different ways, of course, to measure where our waves can end. But over here, we're looking at the triangle wave C being done, okay? Which means we can confidently draw a trend line over here, connect these two lows, okay? And when on the way down, we can expect wave V to end around that level over here. So this is where wave B could actually end. Now, we are expecting wave D. Okay, so one way to see wave V, of course, is going to be an ABC. Okay, now, because of the slope of this bottom trend line, this is very likely to be some sort of descending triangle or so. Okay, because a descending triangle can then lead to further upside, which we can expect once this pattern completes, because we will expect an ABC, right? So an ABC, it's a 5 correction, 5, 3, and 5 wave. So we're going to expect a 5 wave move to the upside after that. So in my mind, the $100 is just a matter of time, probably maybe even in 2022. Even though what we're looking now, okay, we're looking at a potential move up to this channel low, which is going to be very far from current prices. But what we can also do is we can take this off since it doesn't help us much, okay? and use a channel that connects these lows and the high. Okay, so that would be another way of projection where wave D can go, and then we're going to get wave V, so that will be something like this, and then we'll move higher up. This, however, it's in the traditional terms, is going to look something like you know, a sort of a head and shoulders, because you're going to have the left, the head, and the right over here. Okay, which still might be possible to get further downside. However, that would invalidate this triangle. Okay, so we still have a few weeks to learn whether this is the case or not, but for now we have to go with that, which means since we are expecting wave D of a triangle, that has to be an ABC correction. Okay, so what I'm going to do, I'm going to use my Fibonacci now, and I will assume around 80% correction to this level, which comes to around the 81 or so. So in the short term, in my eyes at least, since we have a low down here, I'm looking at this as 1, 2, 3, 4, and 5, which means we're going to get wave A up to around the 62. Okay, and then that's going to be in a minute degree, and that means that we're going to get an ABC, because an ABC is what we usually get for we will definitely get corrections for triangles. Okay, it's just that sometimes one of the waves C, D, most often are complex, so we can expect this to turn into something different, but either way the end completion is going to see that with this particular scenario in mind, going up to around the 82, 83, okay, max 83 level. Okay, of course, since we are now in, it looks like we're correcting in wave 4. Once we do see this correction ending, we're going to get another leg to the upside to complete 5, which is going to be A, and then we're going to get B, and then we're going to get a 5 wave move to the upside for wave D, and from there do another ABC down for E, and from there start moving higher, and you know, very likely to be much higher than anything that we've seen in the recent history. Now, S&P, I'm going to take you out just to have a quick look on the daily as well. This is a very long cycle move, okay, that goes back to whenever the S&P started. So what we need to look, we need to separate these from the previous low that we've seen down on the 20th of March. Why? Because that gives us an idea of where we're going to expect to go, since we are now expected to complete the 5th wave. Okay, since we've done an impulse to the upside up for wave 1 and 2, we can use the Fibonacci expansion tool over here from 1 and 2. Yeah, and look at exactly where our wave 3 comes near 162, which means our wave 4 being done around that level at 120, 130 or so, at 42, around 4300s, means that this is our wave 4 internally, and we expect another wave to the upside for wave 5. Now, usually when wave 3 does the 161.8 extension, our wave 5, technically speaking, can end anywhere above, but usually, according to guidelines, it goes up to the 200%. Okay. Now, what does this mean is that, and that matches the count as well. It means it can mean two things. Okay. One is, since we have 1 and 2 and 3 and 4 and 5 here, and this is now correcting, it's going to be something like, and we're going to move lower, and that is going to be, of course, a very, very, very big crash for the stock market, because we did have 5 waves up, I repeat. But there is also the potential that instead of that being the 5th wave up here, and then we start correcting, we have a first wave, and this is still a 5-wave move, which means this is a second wave when I get the 3rd, the 4th, and the 5th. Okay, which is going to look at around the 5K, to be fair. But then again, we're going to use the same trick with the FIBO, but this time is a bit different as well, because we got the 3rd and the 4th. We can use the same actually for on here, and I'm going to do it soon. We can assume the 49.87 if it's going to be 100%, but due to the restriction to around the 5K, it might be a case, guys, that we might see something like an anti-diagonal over here. Okay, so this is also very possible. So anti-diagonal or 5-wave impulse towards 5K, it's the one scenario. And the alternative is that we're gonna start moving lower aggressively fairly soon without doing a fresh high. Okay. There is also an alternative that is not as highly possible because we've got 5-wave moves to the upside. That this is 1, 2, 3, and 4, and we're gonna get the 5th one up and then start moving lower down. But I see a clear 5-wave structure for here for now, so this is not highly possible. Now, as I said, 1 through 4, and the 38.2 is our level, which comes around the 5100s. So it's very close to 5K. So either approach you use, you get a cluster to around 5K and just above it. So keep in mind that, you know, all the alternatives. So if we do break higher, there's very good probability that we're going to head towards the 5K. And finally, for the prices of silver, and silver, of course, is a commodity that is a bit more under pressure than what gold is, but still moving along the lines of, you know, of gold. We did have a very deep correction down to around the 11, a multi-year low here, and since then we started moving up, and that move to the upside, guys, looks very progressive to me. I know, well, you know, imagine down from 10 up to 30. We've done a correction down to around 21 or so, but I do think there is a bit more room to the downside before we start the massive upside leg. So here's what we're looking. We're looking at, first of all, either an ABC in the supercycle degree or an 1, 2, 3, 4, and 5. Either way, in case this starts moving higher, then it's very likely that we are gonna get through that level, the 49.80, okay, and never look back. This is what it looks like, okay, at least for now, because this being a primary degree means we have also the cycle degree to move up, unless if, of course, you know, the assumption of being a primary degree is not correct. Either way, we're moving impulsively, and there is no question that we remain progressive to the upside, especially since we're still above the 2115, as well as above the 1976, as well as above the 1840. Yes, all of these levels are important. There is nothing that is going to invalidate that downside leg until we get down to 15. So you can understand that there is still a lot of room to move up or down. But if we look at the main scenario over here, which I'm looking at a potential 5-wave move to the upside, which ended, and now we are correcting, and we are correcting in an ABC manner, which is an expanded flat. Actually, can be considered also a flat. I wouldn't say it is expanded, so that's why we're not expecting much downside as well. There is a small interaction just above the previous high here, but it's not above 105 of the wave A, which means it is expected to be a normal flat, which means it can go low, but not as much. So we can expect, for example, the 127 to be reached. So you see the 105 is not done here. So if we reverse this quickly, you will see the 127, which is a very good level to assume that this ending diagonal is going to end. So what I'm saying is that we have an A, B, and C. Okay, actually, let me fix this. Something like this. Okay, this is an ending diagonal in a wave C of a regular flat pattern. Okay, and we are looking at the regular flat pattern now. So in my mind, with its waves 1, 2, 3, and 4 done, that it's heading towards a fresh low. Technically speaking, any low below the previous low, it's the level, it's a zone to start considering that this is the end of this move. Coincidentally, the 2089, it's also the 50 Fibonacci retracement of this downside leg in wave 2. But don't forget, if this takes a bit more time to come into fruition, because we expect a correction and then another leg down, it can even take us down to, you know, to like the 62 correction or even lower, depending on how long it's going to go for. But if we trend these lines forward, okay, you see that we'll have to remain within these guidelines. The moment we do break above it is the moment that, you know, this is very likely to start moving higher for fresh highs, not just above, you know, for fresh all-time highs, not just above the 30, okay? So this is also what I'm looking on the prices of silver. So I'm expecting this leg to end around here, then get an ABC, and then we're going to get another 5-wave leg to the downside. And from there, we can start looking for prices to reverse. Okay, so guys, that's going to be also for this week's Elliott wave forecast. I hope you enjoyed and it was highly educational for you. In case you have questions, don't forget you can drop them on the comment section, and I will arrange to get some comments back for you and to you. So thank you very much for watching, and until next Wednesday, don't forget Daily Markets Watch tomorrow in the morning session. Take care and trade safe.